Hello everyone, welcome back to my channel. Have you ever imagined a future where paper money is a thing of the past? Coins and bills are only found in museums. All currency is digital and borderless. Bitcoin and cryptocurrencies have completely transformed finance. Far-fetched? Maybe not. The revolution may have already begun. Have you ever wondered if Bitcoin could make the almighty dollar obsolete? Well, buckle up, because we're going to take an epic journey into the world of digital currencies and see how Bitcoin is challenging the dollar's dominance. Bitcoin was invented in 2009 as the first decentralized digital cryptocurrency without a central bank or single administrator to revolutionize the concept of money for the internet age. Today, the crypto market is valued at over $1 trillion. So could Bitcoin and other cryptocurrencies truly challenge the supremacy of the US dollar one day? The dollar has been the dominant global reserve currency since World War II, but nothing stays on top forever. As Bitcoin continues to mature, there are at least 5 ways it could impact the greenback if adoption gains more momentum. Let's dive in and analyze how Bitcoin could influence the dollar's value, status as the premier global currency, use in payments, government monetary policy, and long-term outlook. Number 1. Threatening the dollar's value. Bitcoin's rise could potentially threaten the dollar's value and strength over time. If the adoption of cryptocurrencies for global trade and central bank reserves picks up, demand for dollars on currency exchanges could drop substantially, weakening the dollar's exchange rate. However, reducing the dollar's worldwide dominance as the premier reserve currency remains a distant prospect for now. For the dollar's value to be impacted significantly, Bitcoin would need to be adopted by central banks in other countries as a reserve asset held in their coffers. This seems unlikely anytime soon, but if a tipping point was reached where central banks started holding just 5 to 10% of reserves in Bitcoin instead of dollars, it could remove significant support for the dollar and cause depreciation in its value against other currencies. Number 2. Limiting monetary policy. Bitcoin limits the control central banks, like the Federal Reserve, have over money supply and monetary policy. With decentralized cryptocurrencies that have a fixed supply, central banks cannot just print more money arbitrarily at will as they do with fiat currencies. This could reduce the effectiveness of their monetary policy tools. For example, central banks may be limited in their ability to rapidly expand money supply through quantitative easing programs, and they lose their ability to enact currency devaluations. If crypto continues growing as an alternative, central banks may need to completely rethink financial systems and policies. Number 3. Enabling borderless transactions. Bitcoin enables global borderless transactions without requiring dollars as an intermediary currency. Cryptocurrencies facilitate faster, lower-cost cross-border payments and transfers worldwide, taking a piece of this lucrative business away from reliance on dollars. For instance, a migrant worker could send Bitcoin back to family rather than wiring dollars through Western Union. Or a business could pay an overseas supplier in cryptocurrency instead of dollars. This demonstrates how cryptocurrencies are directly competing with the dollar for international transfers and payments. Number 4. Providing an inflation hedge. Bitcoin advocates say its fixed supply makes it immune to inflation. But in reality, Bitcoin's wild volatility disqualifies it as a stable store of value thus far when compared to inflation hedges like gold. However, if cryptocurrency prices stabilize over time, they could emerge as a viable inflation-resistant alternative to protect purchasing power against loss from inflationary dollar-denominated assets. This could entice more institutional investment from those seeking shelter from dollar inflation. But for Bitcoin to fulfill this purpose, it needs to achieve much more consistent valuations over time first. Number 5. Gaining a bigger foothold in digital payments. In the long run, Bitcoin is part of a larger trend towards digital payments and an increasingly cashless economy. Research shows the use of physical cash declining year over year as credit cards, mobile payments, crypto, and other digital methods disrupt the payment space. As fiat money usage declines in the future, decentralized cryptocurrencies like Bitcoin stand to gain an even bigger foothold for streamlining finance and digital transactions. This gradual shift could accelerate the mainstream adoption of cryptocurrencies. The dollar remains crucial to the stability of global markets currently, but Bitcoin and cryptocurrencies are shaping up to be an intriguing monetary experiment that could profoundly impact the future of money, finance, and central banking over the long term. The emergence of Bitcoin and cryptocurrencies is just the beginning. As digital currencies evolve, they have immense potential to transform finance and empower individuals with decentralized, borderless money. Make sure to subscribe and stay tuned as we continue exploring this financial evolution in future videos. Thanks for watching.